there guys, welcome down to episode 4 of the Boydens Prop Cast. A really exciting episode today. We've got Josh down from our off-market and property sourcing department. He actually heads up the department, and as you've probably seen by today's episode title, it is how to build and sell a stronger property portfolio. So without further ado, Josh, Tell us a little bit about yourself. How did you get into this? Because it's fairly specific, isn't it, I suppose?
Yeah, it is. I've had kind of a weird journey in property. So I started out just around 10 years ago in South London as a lettings neg.
Yep.
So working across Battersea, Riverside and all the
lovely.
big kind of exciting blocks.
Yeah.
Battersea Power Station was one of my first ever deals.
Was it completely transformed from them, or was it?
There was still all the work going on. So it was Circus Road West, which is the bit that kind of overlooks the power station.
Okay, yeah.
So that was one of my first deals. I've carried on working in London for about 2 years, and then moved out to kind of back to Essex way to take a job as a lettings manager.
Okay, yep.
It was at a big corporate agency.
Yep.
Didn't really enjoy kind of the corporate side of it that much, so it kind of led me back into independence.
Yep.
Where I was doing portfolio reviews and helping landlords and stuff, so getting kind of closer to what I do today.
Okay.
So trying to make their portfolios more efficient and make them run better and stuff like that, and discussing kind of management options, or if it's better to offload some and keep some and stuff like that.
Okay. So what was that? Was that just as part of the management job you had at the time? You kind of landlords would come in, they go, "Look, Josh, not making this much out of that. What shall I do?" As simple as that, really.
Yeah, pretty much. At the independent agency I was at, I was given a specific task of like lettings valuations, but it kind of expanded into kind of quite a few different roles around that. So we launched the actual portfolio review service, which did really well. I did that for a couple of years, and then actually went to work for a private client, so dealing with just their portfolio, so a mix of huge amounts of residential, commercial, and then a load of buildings that they operate themselves as part of another business they own too.
I think from speaking to you outside of work as such, well, not personal, but in terms of, you learn a lot from that role in terms of you could really see it from the owner's side of things a lot more, because you were working directly for an owner. You were kind of making owners' decisions rather than as an agent. You're always, well, you don't actually own it, do you?
No,
kind of style
as an
of
agent,
thing.
you're giving as much advice and your knowledge and time as you can, but working kind of actually client side on it when you're dealing with agents, and I was told, just take ownership of the portfolio as if it's yours. Yeah. And then once a month I've got to go in and defend my decisions and stuff of what I've done.
You were telling some good stories last week. We went up north to an off-market kind of course up there, and there was some really interesting stories you were telling us about hotels and how people are actually renting out hotels for guaranteed period of time, and it was something that I hadn't really thought much about, really, but not really what we're here to talk about today. But if anyone does have kind of hotels and wants to have a guaranteed kind of income from it, then more than happy to come and speak to Josh with reference to that. But day to day, Josh, what does now you've joined ourselves, what do you get up to?
So property sourcing is a very kind of dynamic role, I guess, because you're working in quite a few different roles within the business as well. So like a normal day, I can be sitting in the morning in a 3-hour meeting with an investor, running through their finances, working out kind of a roadmap, looking at their kind of end goals of owning a portfolio, and creating kind of a whole plan for the next 10, 15 years of how they're going to build this portfolio, what kind of efficiencies they're going to take and stuff like that. And then in the afternoon, I can be out valuing anything from one unit up to a multi-million-pound portfolio. Yeah. And everything in between, or I can be stuck behind my desk doing compliance reviews and stuff, because everything we sell, we have to make sure it's fully compliant for the letting side. So I'll spend I'll spend an hour or so going through every single document that's associated with that property. So,
and it's also clients that are Boydens we've had for 20, 30 years. Sometimes every landlord that is looking to sell speaks to Josh first to see whether it is something that we could kind of sell to an incoming investor if there was a potential there for it to turn around. I think we go on to that in a little bit more detail in a bit. But then also, you've got clients that are phoning us up and speaking to us for the first time. So it's a real broad amount of clients, individuals, and that's the fun of it, really. Well, that's why I enjoy it.
It's a really diverse group of people we deal with. There's some that just own kind of one property and want to offload it. There's other ones who, like we went to go and see one the other week, who I actually know and lives around the corner from me. I had no idea that she had
eight properties in a
exactly.
business, and it is really interesting to hear that the stereotypical landlord isn't the stereotypical landlord. People fall into it for all sorts of different reasons.
I don't think the stereotypical landlord exists, really.
No. So that takes me back. So we've got a lot of landlords that we speak to and that kind of thing. But you also said we obviously take people from the start who kind of have got maybe an inheritance or earning good money. They've got a spare pot of money. So where do most landlords or investors go wrong when they start to build that portfolio?
It's a difficult thing, really. Like, I don't want to say anyone does anything wrong with a portfolio because everyone's got their own end goals and things like that. I think the most important thing is taking a step back and thinking about what you actually want to achieve out of building a portfolio or buying property. Like, there's so many landlords I speak to now who are selling one or two because, for example, they've actually built quite a large portfolio. They've bought two in their personal names. The rest are all enveloped within a company. And these two properties are pushing them up a tax bracket and they're making no money out of it. So they didn't take a step back at the very beginning and say, actually, I probably want to own 20 properties within the next 30, 40 years. How do I do that? How do I go about it? It was, oh, that's a good deal, I'll buy that. And they didn't think about any of the efficiencies that can be had around it. So it's not a specific mistake, but it's planning out your end goals.
I think that is. If you fail to plan, then you plan to fail, which is always the saying that I think everyone says, really. But it is to, as you say, come into the office, sit down with a landlord, and go through what they want to achieve out of it. If they just want to have one or two, they want them to pay for themselves, but they're mainly after I suppose, capital growth for when they're 60, 65, that then they'll look to sell it. Then you probably go, right, I don't think setting up a whole business and doing all of that is worth it. You can hold it in your own personal name and go down that route. So it really is kind of figuring out what that client wants at the end of it.
Because it's also just, it's not always efficient to put property within a company. A lot of first-time investors think, right, the best way to do it, put it in a company, then it's separate from me. But then you're paying enveloped property tax, you're paying corporation tax, and all these things. If you're only going to own a few, it might not work for you. So you do really need to think, right, what are my end goals? How am I going to get to them? And you don't need to keep to it. Like, there's loads of landlords. I don't think I've met a single landlord who said, I planned out this, that, and that. I've executed every single step on this, and now I've got my end goal. There's changes within the law, within the market, and everything that throw curveballs at you, but you just have to work with it. If you've still got that end goal in mind, and you're still working towards it in some way, that's the most important thing.
There was people, pre-COVID, they were flying around getting as many kind of student HMOs as possible, maxing out on the lending of it, and then all of a sudden when mortgage rates went up and then cost of living XYZ went up, find themselves having investments that aren't actually making anything, and there's no capital in it at all, and they're kind of stuck with something that is... But that's other forces. But that would have been a fairly high risk investment method, really, wasn't it, at the time? But so in 2025, what would you say defines a strong or healthy portfolio? I know what you're going to put on.
Yeah, it does depend on what you want out of the portfolio. Like, I've got one client who's offloading a few properties now. He bought them all cash. They're unmortgageable properties, but because of that, they're very cheap. but they yield 17%.
Yeah.
Without taking into anything else, just purely the rent is 17% a year. But that property was bought them in 2020 for 60 grand. It's worth 60 grand today.
Yeah.
And I'd probably put money on the fact it's worth 60 grand in another 5 years.
Yeah. Yeah.
I've got other ones who make 2 to 3% on their portfolio. But when you take into capital appreciation, they've bought in really high-end areas where it's not going to sell to another investor. It is going to sell on the open market. And they're going to make all of their money back at that point. They're not going to make it through the rent. The rent kind of ticks over and pays towards the mortgage and stuff like that. But yeah, there's not an ideal portfolio, but there's an ideal portfolio for each person.
Yeah, it is whatever someone is looking to achieve out of it. I suppose an unhealthy one would be one that is losing money on on a monthly basis, or even one that is kind of just splitting even. But then if the capital growth isn't there at all, then it's not a good portfolio at this time. You either need to get the rent up if you've been leaning on the rents, or if the rent is as high as it will go and you're still not making any money and there's no capital growth, then sell it. Use that capital to find something that is gonna work for you, really. So it's there's lots of healthy for the person, but it's fairly obvious if it's unhealthy or it's not good, isn't it?
It is, but a lot of people also don't take into account the capital appreciation they're getting on the property. So some landlords I speak to about their property and they say, oh yeah, it's underperforming, it's this, it's that. Not my best one, I don't want it anymore. And we sit down, we look at it, okay, actually you bought it for £100,000, it's now worth £380,000.
I'm making no money on it.
Yeah, but then you build that in and over the time they've owned it, their yield is actually like 12% blended between the two.
Growth of that, absolutely. Absolutely. I've got a question here. Does how much of your kind of role does location or timing still kind of play a part for it? Is there kind of I know that there's been a real push for, there's adverts online, everything like that, come up north and you'll get the best yields and that kind of thing. I think that people will look at our area, Essex, Suffolk area, and think, oh no, there's no point investing there. You're only going to get 4.5 or whatever percent. Do you think there is still an element of that, or?
There is an element of location, obviously. I don't think it's as vast as north-south. It's more of have a chat with a letting agent or something like that. Where are the best areas within where you want to invest? So for us, North Station, always lets. You're going to have
absolutely
no void periods down there. Stanway, exactly the same. So on a smaller scale, location plays a really important part. But on the wider scale, we're still seeing blended yields of 13, 14%. We've got one with a rental yield only, which is getting 10%, which we've got at the moment. You can pick that up here, and then you've got the capital appreciation that comes with being down south. Whereas up north, you get some capital appreciation, but not as much. So,
that one you speak of on at 10%, that's a great buy, because you can. It's a property which has got 2 flats in it. So even if you got annoyed with it or you wanted to move it on, then you've even got options there to kind of split it up properly and sell off 2 separate leases. So there are great investments in this area, with potentially longer standing kind of tenants perhaps, and also with that potential capital growth. So it's about buying smarter, isn't it, I suppose?
Exactly.
If you were just going to go and buy a 185, 190 grand flat on Rotary Way for 200 grand and the service charge is X, and you are going to be making 4.8 to 5.5%. But for some people, that could work. But it's not really what you're here for.
No,
is it,
it's not. And it is something we build into our calculations when we are marketing flats, which we don't do massively because they don't present as good of an investment as a freehold property. But when we advertise a yield of, say, 5.8%, that is taking into account the fact that the service charge ground rent at its current rates though as well, because
Yeah.
as we know, they can
Absolutely.
fluctuate as well.
Absolutely. Right.
Lovely, thanks for that,
Josh. So
Yeah.
now looking a little bit more on sellers.
Mm-hmm.
Why are landlords looking to sell right now?
It's a diverse reason. Like I've got quite a few who are looking to retire and are just like, look, it's too much hassle now.
Mm-hmm.
A lot of them are self-managing landlords
Yep.
who are just saying it's too much hassle.
Mm-hmm.
I don't think I've had any of our managed clients or any managed clients from other agents coming to us saying it's too much hassle to deal with anymore.
Yep.
I think there's a lot of fear-mongering around the Renters Reform Act.
Yep.
Especially after it being given royal assent the other
Yeah,
day.
royal assent now.
Yeah.
Absolutely.
There's a lot of scaremongering around that, but realistically, I don't think I've spoken to a single person who's selling because of renters reform, because it's not as scary as the media and stuff trying to make it out.
No. I think as long as the thing with obviously renters' rights, it's a change, and people always make, I suppose, a decision on a change, but they're scared of it. Yet if they are completely up to speed with it and learn everything about it, then it's not that scary. You know, we do a webinar. We've got another webinar end of November, which we will be touching on the update of that. So please do mark onto that to have a listen on that. But it is about informing yourself about it. But when it's managed and everything like that, there's not going to be really any difference. Obviously, there's the changes of the serving of notices. They're going to be lengthened up a little bit, but this scaremongering about periodic tenancies being constant, people aren't going to be moving out of a house within 3 months, 4 months. It's just not going to happen. There's a significant lack of stock for people to move. So it's a nightmare for tenants to move at the moment and find something that they actually like. When they're in somewhere they like, they're not going to be flying around and moving everywhere.
No.
It's more if they need something bigger, or they're moving areas, or they need something smaller. I can't see any major reason, but I do echo yours there, Josh, in terms of in our area, a lot of landlords purchased, 20, well, even 15, 20, 30 years ago, and they are getting to that age of being, 65, 70, 75, even 80, and going, I either want to use the money and, go on that trip that I've been waiting to do for ages, or I don't want to leave it for my kids to have to deal with once they
a lot of I want to go on a trip kind of ones.
Yeah.
Almost every time I have a meeting with someone who wants to sell their property, I get shown slides of where they want to go. I get shown the website, the cruises.
This is the cruise I want to be on. Yeah.
When you sell my property, this is where I'm going with the money.
So on that note, so if someone's wanting to move or want to sell for that reason, there's obviously there are things you can do. Take the capital out of it, remortgage it, those kind of things. But if someone is 100% set on it and wants to sell, what makes an investment property more appealing for that buyer? What could landlords do?
There is obviously an element of yield and stuff like that inherently with investment property or investment of any kind. The two major things are going to be the same as residential sales. It's price and position.
Yep.
If it's a nicely presented property and stuff like that, then it's easier to have those conversations. But if I'm talking to a potential landlord about buying a property, location fits, price fits, yield fits, I show them the photo and there's a fridge in the front garden, a sofa on the driveway.
Well, that tenant isn't great, is it?
Yeah, it's a bit of a harder sell then. So there's obviously, like I say, an element of yield, so making sure that your rent is close to the market rate as well.
Okay.
You've not got to kind of really, really push it, but as close as reasonably possible.
Yeah.
Because that will obviously help us get you the best price as well.
Yep.
If you're sitting 45% below market rate, we're going to have a conversation around, can you wait and sell in 6 months once we do the work and make the property a bit more efficient?
Yep.
Or are you willing to take a little bit less on the property?
Yeah.
How much do you need to get out of this property?
Yeah.
because it has to be one or the other to make it attractive.
Yeah.
Though, if it full market rate is going to sell at a 6% yield at 250 grand, but you're renting it 50% below, we've got to take some of that into account.
Yeah.
Obviously, the new low owner can increase the rent, but they're buying it off market with the tenant in situ for the benefit of they're not going through all the work, they're not going to an agent on day one, and things like that.
So, in that, Josh, what do we do? Obviously, you've talked about helping kind of get a landlord ready to sell, but what can we do to help these kind of landlords sell with a tenant in situ, off market without as least hassle as possible?
Yeah. So a majority of the time we start off with kind of reviewing their portfolio. So we'll do it either I'll come to them, they'll come to the office, or we'll do it over Zoom or something if they're a bit further afield. But sit down and do desktop valuations on every property they've got for sales and lettings. Work out, right, are you close to the market rents? Are there any improvements we can make on this as well? We are kind of honest with it as well. If we think it's not worth selling the property and we can make improvements in a different way, we will be honest with that. Same as if it's not going to work for the off market. I don't want to waste their time by me talking to loads of investors, and equally I don't want to waste my time talking to a load of investors about a property that won't work.
Absolutely.
So we'll have an honest conversation and recommend almost a plan of like, actually, if you keep these two, they're your highest performing ones, they're going to do you well. These ones we'll look at selling off market, and then this one is probably going to have to go down the residential retail sales
go on
route.
the open market kind of route. So in terms of when you've had those conversations, how much of the time do you kind of do a portfolio review as such, and then they go, oh, actually, this I could with bring up these kind of rents and this kind of thing. It's quite a good investment, isn't it? How much of the time do we then start managing it for them and taking all that hassle away from them? I can imagine that happens a reasonable amount of time, I suppose.
Yeah, I get a lot of people who are surprised about how efficient they can make their portfolios, and some of the time it is, right, keep these ones, sell these ones, that will pay off the finance on these, and then 100% of the rent is going into your back pocket after that. So going through management, then you're losing the hassle of looking after the properties. And I had one landlord who used to be a gas engineer and went out on Christmas Day to change parts in someone's boiler and stuff.
That's not what you do.
No, it's not.
Well, it is what some people do. But that is another real big element is time, isn't it? Landlords are finding their time back. If as you say, we can move two on. Pays off that mortgage, and then the rent from there is more. Take our kind of obviously management costs out of it, and they're actually making more out of it as a whole, but they don't have any of the stress, any of the strain, none of the sleepless nights. Then it's a win-win for everyone, really.
That's exactly it. Like a lot of the time, the people I'm talking to don't actually want to lose their properties, they want to gain their time back. And it might be through offloading the properties, or it might be through making them more efficient and giving them to us to look after. And then suddenly they've got that time that they wanted back, and they've still got the income from the properties, and they're still increasing in capital appreciation over the years as well. So
it's a better investment to have it for the next 10 years rather than sell it now, and it's depreciating, isn't it, really, if you're going out and doing that. If you can live off of that new rent that's coming in, then happy days. You can do other bits with it. But
absolutely.
What does, I know a lot of people that go off market, that's you're not going to get what the best you can for it, or those kind of things. What does off market really mean, and why is it so valuable?
So it is specifically targeted at investors. So the idea is to make it as easy and efficient as possible, because investors who are serious aren't spending their time scrolling through Rightmove every night trying to find the best deal, or taking box of brownies to an estate agent to try and win the valuer's favour or anything like that. No. The idea is to make it as easy for both sides, or all three sides really. It's for the investor, for the seller, and for the tenant as well. A lot of the properties we have that we're selling is the fact the tenant's been there for 8-9 years. It's been self-managed by the landlord. They love the tenant. They don't want to throw the tenant out to put it on the market and stuff like that. That is definitely an element of it. We're not about kind of bashing sellers over the head to get below market value or anything like that. We do an accurate valuation. we'll do a traditional sales valuation of what it will get if we put it on Rightmove, Zoopla, call our applicants about it.
Yep.
And then we'll do an off-market valuation, and then we'll discuss the pros and cons of both as well.
Yeah.
We'll discuss the fact that if you're going on the open market, you'll have to get the tenant out. You'll have a void period, you'll have council tax to pay, standing charge on gas and electric, all of that.
Yep.
And then you'll also have solicitors' fees, which obviously you do have on the other side, but you have agency fees as well. On the off-market, we waive our fee to the sellers to try and make it a bit more attractive.
Yep.
And your tenant doesn't have to leave. So A, that's quite nice to the tenant, but
lovely.
also from a commercial standpoint, you're still getting rent right up until the completion
No
date.
void period, no kind of the amount of times that it's you sell something on the open market, the tenant hears wind that it's being sold, and they go, right, here's my notice, and they move out before you serve notice, and then suddenly you've got a property there empty for the 3 months to sell it. Well, what's the average time? 64 days or something like that. So, 2 months for it to sell, and then how long is your piece of string for how long the actual sale takes to complete? Really, you could be looking at 6 months of void before you actually get the money in. Really, so
and it's not just lost income; it's the costs of council tax and stuff, and it's not ridiculous costs, but it still may be costs that you haven't factored in.
Yeah, and if you've got a mortgage on it, then absolutely. Just having a look at these. I don't like that one, so I'm going to go for. Can you give me an example of kind of a successful match between a seller and an investor that you've put together?
Yeah, of course. So I had a very, very nervous first-time investor. Was petrified of flats. Okay. Because service charge, ground rent, all of that, absolutely justifiable. Yeah. I can understand why you'd be nervous about that, but he was petrified of that.
Okay, right, yep.
Also, then looking at houses, because he could have afforded 2 flats potentially.
Okay.
He could only afford 1 house.
Right.
Then he's petrified about what if the tenant doesn't pay.
Yeah.
All of that. So obviously we've
spreading the
spreading your risk. We've discussed rent and legal policies and everything like that, and that's kind of calmed him down a little bit. We've found him a freehold house that's been converted into 2 flats.
Okay.
So he's managed to split his liability across 2 properties. Nice. The risk is split across them.
Yep.
He's got the 2 properties that are going to be kind of, like you said about the other one in with a 9% yield. Yeah. At some point in the future, he could sell one, retain the other. Yeah. He can play around with it. He could also keep it for a couple of years, draw some cash out of it, and buy his 3rd investment out of that as well, rather than doing his 2nd one. Yeah. So he's absolutely thrilled. He's managed to get kind of his ideal investment that he didn't know originally was his ideal investment until we spent about 2.5 hours talking through
what
kind of how we can do it. Will this work? Will this version of investment work for you? Or do we have to go down this route to make it work and stuff like that?
And then, not luckily, but it was good that there was a seller there that had this kind of property that matched his requirements. And some people might. I'm going to put the spin on it. Why someone? Because people at home might be going, well, anyone would love that as an investment. But actually, if you own a property that's got a flat above and below, there can sometimes be quite a headache between the 2 tenants. If the 2 tenants don't get on, and then you're caught up in the mix of things, then it can be bad. Or if one tenant isn't looking after it, or one tenant's a bit of a nuisance and the other one isn't, or you can sometimes have a bit of a battle on your hands, I suppose. Yeah, so that'll be a negative of buying something like that.
That's the reason why a big block of flats has block management to deal with those things, because sometimes it can get contentious.
Yeah, indeed. So advice to a landlord at the moment, they're sitting at home, been listening to us for a while, and they're going, right, I'm not sure. What should I hold or should I sell? What would your advice be for them?
Honestly, I think it's quite simple advice. Just give us a call and have a chat. Okay. We will be honest with you, because we can help you in any number of ways. We're not just a sales agency, just a lettings agency, just off market. we can discuss the entire portfolio.
Yeah.
I normally try and get all the information first so I can kind of almost do a bit of a presentation to the and lay out kind of everything to do with your properties, what's doing well, what's potentially not doing as well, and everything that we've already discussed. But have a chat with us. No obligation. We're happy to just discuss kind of how we can help you. Or
I do think that is a real. I want to reiterate that if you do come to see us about the off market and Josh does the figures and it isn't something that would work, or say it's worth 200 on the off market, but it's worth 300 on the open market without the tenant in it, we'll talk to you about it. We'll say, look, this is the difference here. You're going to make far more going on the open market than on the off market. We're not here to undersell your property to an investor. That isn't what this service is for.
That's why we always give all three valuations of full market value if you sell it through retail, off market value, and your rental value as well. So you can see at a glance very easily any inefficiencies. Oh, actually my rent's 40% below that, so I need to look at doing that. Or actually I only need roughly that number to kind of do what I want to do. Or look, how can we make this work? Do we go into management or anything like that? But we're always completely open
book. Yeah, absolutely. And flipping that, investor. So what should, if someone wants their next investment, what should they do as their first kind of step?
Yeah, exactly the same advice. Have a chat with us.
Yeah.
Like there's hundreds of property courses that will charge you £5,000 to learn how to use Rightmove properly and stuff like that. They don't sit there and listen to you and talk to you about what your end goals are and stuff like that. It is a form setting of do this, and you'll be a millionaire, basically. It doesn't work. I speak to loads of people who have done them, and then we've sat down, talked, and actually their portfolio they want to build is completely different to what you've learned online.
Yeah.
So honestly, give us a call, have a chat with us.
Yep.
We're always happy to sit down, run through, talk you through kind of, obviously we don't give financial advice, but we understand and know the different vehicles and kind of ways that you can get to your end goal, and we can discuss them, and then it's obviously up to you to decide how you're going to implement them eventually, but we're there to explain kind of the whole process to you and stuff like that. And get you access to good off-market deals as well.
Indeed. So how can landlords or kind of developers or investors reach out if they want help from yourself, Josh? What's the best way?
Drop me an email, I guess. Yeah, so josh.patrick@boydens.co.uk.
Yep, on LinkedIn?
Yep, LinkedIn, Josh Patrick, on there as well.
Find us on there, or obviously on our website. We'll also put a note at the bottom of the video that will have Josh's direct dial on there, so if you do want to touch base with him on the phone, then feel free to give him a call on that front. But yeah, I think that's been a really insightful chat. I don't want to, I know we've been talking for probably about half an hour, so I think we could carry on talking for another half an hour about this kind of thing, but it'd be great if anyone at home has got any questions or queries specific to this, or anything that we would like to ask Josh in the future. More than happy to sit down and do a question Q&A with yourself. And we'd love to obviously get you back in the chair in a few months' time, perhaps next year, once renters' rights bills come in, and then give us a bit more of an update on that. But no, thanks everyone for listening, and again, thanks Josh for spending the time with me. But yeah, don't forget to like and follow on our YouTube, Spotify, and then obviously on our kind of Instagram, TikTok, all those kind of things. So yeah, thanks a lot, and see you at the next episode. Cheers, bye.